Good evening, ladies and gentlemen. My name is Marcus Bradley. I am host and founder of the XY Perspective. If you can close your screen real quick, Miss Miss Simpson.
See if I can figure that out.
Yeah, stop sharing.
Pause. There we go. How's that?
Still see it. Yeah, hit stop sharing, and then we'll bring it back up in a second.
Just pause. Stop share. There you go.
There we go. There we go. As I was saying, I'm sorry about that. My name is Marcus Bradley, founder and host of the XY Perspective. Tonight's show is about taxes. Tax season is here. Tax season is not upon us, it is on us. And most of us are afraid of this season. But what do we say at the XY Perspective? Knowledge is power. We're going to do something tonight to take some of this fear away. We have a wonderful, nice lady who has volunteered her time to do this for us and pass out this wonderful tax information that the government loves to use to get in your pockets. We try to get some information and knowledge down to keep them out of your bank accounts and stop owing them more money that they take from you each year. Miss Deana Simpson is from Arizona, and she is going to wow us with the information that the government is scared to give us. So if everyone can mute back while she does her presentation, we are going to listen to Miss Simpson give us knowledge that is going to make us powerful. Miss Simpson, the floor is yours.
Thank you so much, sir. I'm really grateful to be here and for you to share your platform with me. 1 second, and I'll share what I've got here. There we go. Okay, so just going to share a little bit of introduction to business and taxes. As Mr. Bradley said, this is the season where everybody's thinking about those things. And really, it's a year-long thing. So we're going to get into what I like to call the meat and potatoes. So a little bit about me. My name is Deana Simpson. I'm an enrolled agent. I have a college degree in accounting. I've been doing taxes since about 2004. I earned my enrolled agent in 2016. And an enrolled agent is somebody who can represent taxpayers in front of the IRS during an audit. So my favorite thing to do right there is I like to win. I started my own business. I hung my shingle in 2018. I'm an animal lover. I have 2 rescue dogs, 2 kitties inside, and a couple ferals outside. So lots of love in my home. Black thumb gardener, all the plants die. Bless ye who are about to die as you enter my home. And I'm a military spouse, and I volunteer in the community. So that's enough about me. Now let's talk about business, because that's what we're all here for. So, you know, most people are looking at business a little bit differently than the IRS is looking at business. And so I want you all to just think about, you know, how you view your business. The IRS is all about the money. Where's the profit? You know, how can they tax you? How can they get in your pocket? But most of us are in business really because we have a calling or a dream or a way that we want to contribute to our community or just express what we love and take that to the next level. So the IRS is looking for certain things that normal business folks are not looking for. You know, are you carrying out your business in a business-like manner? Do you keep records? Do you keep accurate books? Are you really wanting to make a profit? Have you made profit in the last few years? Do you depend on that money to live? They're looking at, is this a hobby? Are you just having fun, or is this serious business? But, you know, most of the business entrepreneurs that are famous, they don't look at business the same way the IRS does. They look at business as a way to contribute to the world, to move innovation forward. So you got to think, you know, kind of in 2 worlds about what the purpose of your business is, and know what the IRS is looking for from you, because that's going to change the way that you're conducting yourself in business too. So you still achieve your dreams and what you want to do, but also be aware of what they're looking for. Because if you know what they're looking for, that can help you plan. So let's talk about what tax is all about. Income tax is based off of your business profits, not necessarily your income. Income is all of the money and things and bartering that you're bringing in. And then you're going to have some expenses. And the profit is what you're actually getting taxed on. And that's why Marcus likes to talk about, tell me all the deductions. Because we want to get down to that profit so that we have the lesser amount of tax. Now, I want to introduce a couple of terms to everybody, and that is tax deductions versus tax credits. So a tax deduction is something that really reduces your taxable income before the tax is actually calculated. So when you're looking at business deductions, those are going to reduce that income. But tax credits are also something that you're going to want to consider because in my world, that's the biggest bang for your buck. I'd rather have something that gives me dollar for dollar tax reduction rather than actual like lesser amount of tax calculation. Does that make sense? I hope that does. So the other thing I want to introduce to you is my favorite topic called net benefit. Really that is what is actually going into your pocket. If you go out and you're going to spend $100,000 for a $1,000 tax deduction, is that worth it? Probably not, because you're out, so much money. And so I want you to think about when you're in business and you're thinking about what deductions are really going to be helpful or useful to you, what is the bottom line of how that's going to affect your business and affect your wallet, and what's the long-term strategy there? So I want you to be thinking about, is a deduction really worth my outlay of cash, my outlay of all of the stuff that goes into finding it, researching it, all of that, because in the end, what you want is more money in your pocket, even if that means a little bit more tax. And I think that will blow people's minds, but it's all about making the money. And a lot of times I see folks with like some of the tax credits that, well, you can actually get what I call the going to Disneyland refunds, and they'll stop making money when they hit that perfect sweet spot. But I'd rather they make $10,000 more and start to go down the mountain and get more money in their pocket, even if it means a little bit more tax and less credit, because that's the better benefit to your family. Don't let the system hold you down or hold you back from excelling and going towards the top. So there are certain requirements in order to deduct business expenses. The expenses that you have are outlined in this Internal Revenue Code 162, and you can always Google that and read it if you want a little bit of light bedtime reading, my favorite. But those expenses have to be both ordinary and necessary. And what that means is other businesses that are just like yours, they have the same kinds of expenses. You don't expect the guy who's mowing lawns for a living to go out and get a Lamborghini to tow his tools. That's just not ordinary. And those expenses have to be necessary too. So in order to earn that money and to make that business function, you really have to have that expense. So you can't go out and decide a trip to Tahiti is really what you need to make your gardening business go. So it's just got to be just like everybody else, and that's doing the same thing. So studying other businesses that are just like yours to see what are they doing? What kind of expenses do they have? How are they succeeding? Is really so important, because that will help you understand how you can frame your business and plan. The IRS does require you to keep records. You need to be able to prove what you're spending. And this is what I think, and Mr. Bradley, we talk about all the time, the most missed deductions. The most missed deductions that I see are the opportunities missed by poor record keeping. People bring me boxes of receipts and there's no organization. There's no notes on the receipts about who they saw, what they got, what's it for. And they can't remember 1 to 2 years later when they brought me that box of receipts. So the better that you are at keeping your records, working with professionals, writing on your receipts, keeping good logs and mileage, they call it contemporaneously, in the moment as you're doing it. I know it's a pain in the what, but it's so, so helpful. A lot of times, go ahead.
If I may, if there are any questions that people want to add, type them in the chat, and we're going to try to do a Q&A after, but type your questions in the chat. Don't try to hold it all to the end. Type them in the chat, and we can respond to some of them at the end during the Q&A session. I just wanted everybody to know that. Sorry about the interruption.
No, absolutely. So I want to bring up one point, and that is a lot of times people want to bring to me their bank statements or their credit card statements, and I'll see a Lowe's bill for $1,000, and I'm like, okay, well, what was that? Well, I don't know. I went to Lowe's and, it was totally for the business. But the IRS, if they audit you, they want to see the line by line minutia of what was on there, because you can buy Cokes at Lowe's. You can buy, Christmas trees for your house and decorations. And so you really do need the actual receipts. And with technology nowadays, it's so easy. You can scan it with your phone. You can take pictures of it. There's all this software. And if you're using those kinds of record keeping things, business deduction, isn't that great? Make your life easier. Use the tools. So let's talk about what every business needs. There's really four main things that every business needs, no matter what you do. You need legal or a lawyer to counsel you. There's contracts, there's liability, there's so much stuff that's going on, and you need that guidance. And y'all, LegalZoom is not a lawyer. Please see and invest in your business so that you make sure that you cover yourself fully from front to back. And we're talking about record keeping, so professional bookkeeper. Not everybody can do taxes and not everybody can do books. If you are a business owner, you don't have the time to wear all the hats. So, if bookkeeping doesn't make you really excited, don't do it. Farm it out to somebody who's a professional. Let them spend their time there so that you can invest your time in what you love to generate that greater income. It'll support them. Don't worry. And then also you need a tax professional, an EA like myself, a CPA, a tax attorney. We're going to talk to you about the tax law and opportunities that are specific to your tax situation. Long-term tax planning and strategy. Every time I look at somebody's tax return, and I'll tell you, every single one is different. And they have different strategies. And I'll start to see, gosh, there's something here that maybe you might qualify for, or I see a trend happening here that maybe you can take advantage of, or maybe you need to change or tweak. And so working with a professional such as myself, we're always looking for those opportunities to help turn things around and get to know you and what your goals are so we can get you there. So definitely working with a professional like me is absolutely huge. And lastly, I'll say that you need insurance. So, if something happens in your business and you have liability, your LLC may not be enough to pierce, to shield you and get, that piercing coming for your personal assets. So do make sure that you have proper liability protection. An LLC is not going to be enough. These are true even in the startup. People don't have the money necessarily at startup to invest in these things, but that's when this is most critical. So, funding and financing and planning what your startup is going to look like really needs to include those things. So now let's talk about the fifth element. I don't know about you, Mr. Massey there, but Mr. Bradley, everybody's got to have a mentor. You've got to have somebody who knows something about the business that you're in, something about how business is run, even if it's not your field of business, but just organization and how to lead or how things work. And so it's really important to seek out other professionals that are in business, what they do, what works for them. And a lot of times nowadays, business mentors, they do cost some money, but I think they can get you to the finish line a little bit faster, and they can help prevent you from making significant mistakes. So I do highly encourage you to seek out a business mentor, somebody that you trust. And when things get hard, that person can push you and they can encourage you not to give up. So I want everyone to be encouraged for that. And that's a misdeduction. People have that person in their lives, but they're not claiming that expense. If you're taking that person out to lunch, sounds to me like a business expense. If you guys are talking about business and you're crying about, you're not sure what to do or how to do something, and they're giving you advice about your business, that's a business expense. You're going to a meal with that person for the purpose of talking business. Write it on the receipt. Saw my business mentor. We talk business over sushi. Boom. Yeah, business. Man. Let's talk a little bit more about the benefits of bookkeeping. So, if you're keeping actual books in a double entry bookkeeping system, QuickBooks, Xero with an X, Sage Accounting, there's a whole bunch of them out there. Using a professional that's going to actually keep double entry, GAAP books, you can actually get bigger tax deductions. And so I'm going to pause for a second and talk about the de minimis safe harbor election. So, let's say that you are a mechanic and you've got your wrenches and you've got your tool chest. And man, I've seen mechanics with tens of thousands of dollars invested in all these little small tools. And those tools, they're not cheap. They're $100, $200, but they all add up. Do you want to be tracking 50 tools and knowing where they go and how much they were? What a pain. So there is this election now for something like that, where you can just write it off in the year that you get it. And this is tangible property, stuff you can touch. And if you are using true financial books with double entry accounting, you can actually write off a higher dollar item up to $5,000. If you bring me the box of receipts, that threshold drops to 2,500. It used to be 500, and that's small potatoes. So having a bookkeeper in your life can allow you to take greater deductions. It's definitely worth it. Also, I see people that just have one bank account and all their personal stuff is going in there and all their business stuff is going in there and everything's going on in the bank account. And if you get audited, the IRS is going to go all over in that bank account. Don't do it. Separate out. This one's business. This one's personal. And so that way you get a firewall right there. They can't get into a cross unless there's a reason to go there. Don't commingle your personal and your business. It makes it easier come tax time too, or if you're trying to figure out what's going on with your business, if you don't have to sort through all of your, DoorDash type expenses that have nothing to do with your business. Keep all your business with your business. I also encourage people to have a separate account for taxes. So, if you're in business, you've got to make estimated taxes. So you definitely want to have a little place that you can shuffle that off to that's earning a little bit of interest. And so make sure that you've got a separate account for taxes. If you're planning on buying a building or a large piece of equipment, you want to be saving over there. Don't mix that in because you'll see that big dollar item and you want to go spend it. So have a plan and use those multiple accounts just like the old envelope system when we used to budget back in high school. And then lastly, I'll say about bookkeeping is the language of your business. If you're a business owner, you want to know, how's it succeeding? Is it, where's my bad months? Where am I bleeding money? And your financial statements, they tell the story. You can see month by month, you can compare year over year, and you want to know, you can take a percentage of expense to your income. There's so many ways you can work the numbers to tell you the story of your business and compare your bookkeeping and your financials to other businesses that are just like yours. And there are resources that can actually give you that research. And if you're comparing your financials to somebody of a similar business, that can help you identify opportunities. And it can also help you identify places where you are maybe not well positioned. So I hope that that's helpful.
Yes, ma'am.
All right. So folks like me, we love our numbers and we love to do tax planning. I'm always thinking about the scenarios of what a business person or a taxpayer can do. And every time that I get to talking to somebody, I get so excited about the dreams that you guys have and the creativity that you have and just the ingenuity and really the gumption that you have to get out there every day and push forward. So you want to know what your goals are, short-term, long-term, over the horizon, because you want your planning to not just be the deduction that you get today, but maybe if you make a different strategy, you can have a longer tax savings over time by implementing a different strategy. So getting to work with somebody regularly, year over year, planning for your goals, have a business plan so that you can get some funding, especially in the beginning. And, you can forecast where you're going. Right now, the government has all these programs about all this energy efficiency stuff. As a business owner, if that's where your heart is, you should take advantage of that. Know what's going on in the law, and working with somebody like me, we can help you to identify those opportunities. I do want to pause right here and tell you guys about something super, super important that is happening this year. And you'll see that it's highlighted on my slide, this CTA BOI requirement. So there was a law passed a few years ago and it's coming into practice right now. And what it is the Corporate Transparency Act, or Beneficial Owner Information Reporting. And it's something that has to be done on a federal government website. You have to sign up. And anybody who has registered their business with a Secretary of State or a state agency like an LLC, a corporation, anything like that, you need to go and basically register your business and all of its owners and anybody who has any kind of benefit. There's a huge FAQ on it about all of the people that you might also have to register on there that may have input in your business. And existing businesses before 2024 have until the end of this year to go in and register. And it's not that hard. It took me 30 minutes. So, and I went slow because I was looking for all of the details to share with you guys. I've heard people can do it in 15 minutes, not hard at all. New businesses that are starting up in this year have 90 days. And the penalties for not executing this are pretty staggering. So you definitely want to make sure you pay attention to that. Please go in and register your businesses, get it done super easy. And if you shut your business down, if the owners change, you need to update your information. Your address changes, get in there, update it. So that you don't have to deal with any of that, government oversight, because getting hit with penalties is way worse than trying to get a deduction. So definitely avoid the pitfalls. All right. Questions about that before I move on? It's a good place to pause for just 1 second, because that's a new coming out of left field, a little zinger.
I had a couple people say something. I put it in the chat. But just on the topic that we were at hand right now, the CPA BOI requirement. I have my businesses registered in the state of Wyoming, which is like supposed to be have some amenity to it. Will those businesses as well be required to meet this CTA requirement?
Yes. Yes, all businesses. And for people that want to remain private, right? We don't want our personal information or any of that out there. There's a way that you can get what's called a FinCEN identifier. So you register for this FinCEN identifier number. And so when you go in and you register that you're the beneficial owner, you use that instead of disclosing your personal information for everyone to see, because some of this is public information. So yes, everybody, no matter where you're registered, if you are operating in the United States and you have a business that rises to this level, you do need to register.
Okay,
absolutely.
And that's a fenced in.
Yep, FinCEN, like a financial center, if you will. FINCEN.gov. Don't be fooled by the .coms. Make sure it's an official website, .gov. And I've got the link right there on my slide for you guys. Right at the bottom of the tax planning section.
Got it.
And I saw your question there about what level of income should someone start looking for outside help to manage the bookkeeping. Man, speaking for all the bookkeepers out there, start when it's simple. Start in year 1, because cleanup on aisle 4 is very expensive for you. And we can help guide you with the record keeping requirements. There you go. Yeah, that's it.
So yeah, that was a question that came to me from someone else. I just put it in that form. That's why I asked.
Absolutely. No, I'm happy to answer that. It's really hard when you first get started because you don't have money. You're just trying to put food on the table and you want to get your dream going. But, I'm going to skip around a little bit here because you know how I roll. I'm such a squirrel. I'll just jump into the excitement. But there are free resources out there. And so I'm going to tell you guys about the Small Business Administration has a department, and it's in a lot of colleges across the United States. So if you look up, SBA.gov, Small Business Administration, they actually have offices that will help you to do business plans, because I've suggested that. I can actually give you guys, because I've got a plethora of links to share with you guys, just in case y'all had questions. But there's free resources there. Boom. There, go write your business plan. You got a business plan, you know what your goals are. You can go apply for financing. You can get investors. You can get Kickstart. You got to show people what your dream is. You have to have it well thought out. And if you have that, you can get investing. So you don't have to rely solely on the resources that you have. There's a bunch of help out there.
And
And
these
so
are
I
not
highly encourage
these are
people.
not just grants, right?
Not just grants, some of it's going to be loans or lending. It really depends on what the environment is, what you're going into, the business, the owners. There's a lot of things, different grants for different things. So
And to
closed mouth
and the
don't get
other,
fed. You got to get out there and ask.
yes, ma'am. And the other question that somebody had asked, if you just have a business and it's not registered with an EIN, you're still allowed to make these deductions on your return.
That's an excellent question. And yes, absolutely. So if this is true of like a lot of hairdressers or people that are doing like dog grooming, door dashers, they're not registered with an EIN. They're the door dasher extreme. And so, yes, if you're running a business and you're not an LLC, you don't have an EIN and you're just running as yourself, absolutely, you're still in it for a business purpose. So yes, you can still claim all of these expenses and you want to keep track of all of your income and all of that, because eventually you may want to make the jump and grow. Facebook was started in a garage. We all know that. And so it's okay to start there. There is
Yes,
a
ma'am.
benefit to an EIN number, and that is, once you start to grow and you're applying for loans and you're, applying for bank accounts and all of this, an EIN number is your business's social security number. It shields your personal information as the owner. So it can be a really good thing to help separate further you and your business and keep your information private. So I really like that because when people are paying you, they're going to want you to fill out a form to tell them about your business so that they can issue tax forms to you. You don't want to be sharing your social security number with a bunch of people. So depending on what you're doing, there's pros and cons to an EIN too.
Yes, ma'am. So let me
Uh,
tell the audience real quick before you continue on with the slides. I'm sorry about this again.
Not at all.
You do not have to have that EIN number or your business have to be registered to get these deductions. These deductions can save your life. It may be the difference between you owing money every year or getting a nice return every year. So get the notepad out, get the pen out and start taking notes. Get copy down some of these links in the chat and keep listening. Miss Simpson's on the roll. We're gonna let her get back going, but you do not have to have an EIN. You do not have to register this business or your businesses to take business deductions, but you do have to be able to prove it if you're at. All right, Miss Simpson, I'm sorry about that. Let's go.
You're absolutely right because, the IRS is looking, for your income, but if you're going to claim deductions, they want you to be able to prove it. And so keeping those good books and records, it's absolutely essential. But, hairdressers, if they're working and they're renting a booth, they don't usually do EIN numbers and they're not usually registered. And for those people, the FinCEN thing, they don't have to register for that because they're not registered with the state. They're not big business, they're not doing that level of business. So, seek out the advice of somebody like myself, legal counsel. If you're not sure about this, check out the website. There's a lot of FAQs on that FinCEN because it is new right there.
Yes, ma'am.
All right. This is going to be your favorite part right here. And talking about some of the most missed deductions. And this is business oriented because in different things I see different kinds of missed deductions. Talk to me about rentals and I'll go off on a whole different tangent for you. But for businesses, a lot of times people have loans. They've taken out loans for business purpose, but they haven't submitted the contract. We don't know what the interest is that they're paying. And that gets missed a lot in the sauce. And so if you have a business loan and you've used it to buy equipment, you've used it for startup costs, definitely make sure that you share that with your bookkeeper and your tax advisor so that we can make sure to capture those interest expenses because we can actually split the payment you make for those items between interest and what you actually bought. And so that gets missed all the time. Right now, there's all of that new emerging tax law about energy efficiency. And so right now, vehicles are the big thing. They're really pushing those plug-in vehicles. There's a lot going on right there. And so that's something that's getting missed. People are going out and buying vehicles or equipment. But before you go and you buy, check in and see, is there a tax deduction for that? because it's very specific about the type of vehicle, the type of battery, plug it in, this year, this make, this model. And so if you're going to go and you're going to make a purchase, isn't it better to get a tax deduction for it? So check and see if what you're after is going to qualify, or if you tweak it a little bit, what your frame is, and still meet your intent, can you get a little something? There's lots of depreciation options out there. Right now, bonus depreciation is supposed to start expiring. And so it's kind of decreasing every year. But right now there's a law in Congress that is in the works. It's passed the House of Representatives. It has child tax credit on it and a whole bunch of other things that's really going to affect and help a lot of families, research and development credits and all of that. And depending on what happens, if it passes the Senate without any markups, we can see some changes with depreciation too. So if you're going to be going out and making big plans, you want to know what's going on with the law so you can plan your attack of how you can best take that deduction. I do see some missed opportunities with business structuring. There's lots of different kinds of business structures. There's LLC, there's partnership, corporation, C Corps, S Corps, your DBAs, your mom and pops. And a lot of people say to me, well, I'm an LLC. You can be an LLC and be a partnership. You can be an LLC and be a corporation. And you can be an LLC and just be a mom and pop. So all of those things are taxed differently. So determining which one is the best for you and what you have going on really depends on how much money are you making? What are you doing? What's in your state? What's the long-term goal? Because if you're going to be a corporation, it's very complex, but there could be tax advantages to certain different kinds depending on what you're making. So if you're thinking about tax savings, this is something to consider and work with your tax advisor on where is that trigger point, that sweet spot to start to look at these options. Because, if you're making $20,000, $30,000 a year, you don't need to be a big old corporation. But if you're making 100,000, $1 million, you might want to take a look at that. So definitely talk to that person about that. The other thing I see that gets missed all the time is the home office. When COVID hit, a lot of people retreated to the home office. And if you were a W-2 employee, there was a law change a few years right before COVID hit that actually prevented you from claiming that home office. And I didn't think that was very fair. Write your congressman, happy to provide their information. But if you're in business and you're in that home office and it's used regularly and exclusively for business, it's not where you store your Christmas lights. It's not where the guests sleep over when they're coming over. This is business and going on in here. That is an area that you can actually claim a portion of all of your other household expenses divided up by the square footage of the room or, something like that. Your electricity, your rent, your insurance, changes going on in the room, your office equipment in the room gets missed all the time. People are on their Amazon account and they're buying their computer and it's mixed in with their personal. Separate out and get that. But that home office, that can be pretty significant. And if you're a homeowner, you can choose to write off a portion of the value of your home in that home office too. Con to that is if you ever sell your home, then whatever you were writing off in that office, as far as the valuation goes, got to add it back in. So this is where tax planning comes in. You want to find the sweet spot where you can do that in a year, maybe when you have less income, so you don't get that nasty tax bracket. Got a plan. Startup costs. Before you open the doors to your business, ding, ding, I'm ready. You're doing research. You're driving around. You're getting advice. You're seeing professionals. You're getting legal advice. All of that stuff costs money. And most people aren't claiming that or keeping track of it until they've opened the doors and they're ready to rock and roll. They think, oh, well, it happened a long time ago. Didn't keep track of it. Meh. But it's such a great opportunity that you can claim that. And there are rules about how much you can claim in that first year that you open your door, ding, ding, ready for business. And so you do want to keep track of those expenses. And so for businesses, this is what I see missed most frequently out there. All right, who wants to talk about my favorite tax deduction? Pay yourself. Yes. Someday you're going to retire and you're going to be ready to pass it to the next generation. And you need to pad your nest egg. There are deductions on your taxes for contributing to retirement. Government wants you to do certain things, and they've put tax advantages into place. I call this carrot and stick. So there's lots of benefits to contributing to retirement accounts. And as a business owner, SEP plan, profit sharing, you can write off tens of thousands of dollars of profit, boom, right there, and pay yourself. Kick the can down the road. And, you know, if you're going to make less money when you retire than you are right now, when you're at the top of your game, you know, that's the time to actually take those monies out and pay that. So definitely explore the different kinds of retirement options that are available to you, what deductions are available, and know what your tax strategy is now and when you retire. And that's why there's a difference between Roth versus traditional treatment. I see a lot of people do this 50-50 thing. Half of it goes in a Roth and half of it goes in a traditional. Lord, please don't do that. It breaks my heart because you're really just splitting the benefit because you don't know which way to go. The difference is, in layman's terms, if you have a Roth, you're paying all the tax now. You're not getting no benefit. But when you retire, you expect your income to be higher, and you're gonna take that money out and its earnings tax-free at that point. Traditional means you're gonna take your benefit right now, lower your income now while things are really hot and heavy. You're making all kinds of money. And then when you retire and things are a little bit less, you got a little bit less income, then you take it out and you're gonna pay a lower tax rate. So that's a very good thing. I saw a question in there about, can a leased vehicle be deducted? Yes, but not in full. So, you know, it has to have a certain level of business use percentage. And I'm going to be talking about vehicles here in just a couple slides. So yes, to the leased vehicles, lots of good business records required there. But yes, leased vehicle can be deducted with a caveat.
Okay.
All right. Business, one of the biggest business deductions is something called the qualified business income deduction. It's about 20%. If you're looking at your tax return and you're actually pulling a profit, check out the line right about where the itemized deduction happens. It's right above that. And it's about 20% of your profit. Boom, right there. Some businesses cannot take that, you know, too much if they make big money and they're accountants or certain professionals. There's limitations. But right now, this is something that came in with the Tax Cuts and Jobs Act. It's set to expire at the end of 2025. I know we're talking about some of the changes coming down the pipeline with 2026. This is one of my favorite deductions. It's so easy. You just have to make money and you get it. But it is currently slated to go away. Congress is in charge. They can always change things. But I love this deduction because I feel like it levels the playing field for our small businesses and makes things just a little bit easier.
If your business is operating at a loss,
That's
do you
bad.
get a QBI?
No.
Yes. No. Okay.
No, you cannot. So QBI is actually calculated based on your profit and any wages that are being paid. And there's also specified businesses that are actually capped. So there's a huge calculation in this. And folks in my industry have spent countless hours crunching these numbers to calculate this and all of the scenarios. And unfortunately, if you have a loss in your business and you're not making money, you're actually in the red, you're carrying forward a loss on this deduction. So let's say in this year you make, you know, you have a really bad year and you lose $10,000 on the books. You got negative 10,000. Next year, you're going to make $20,000. Woo! Yes, we have turned that right around. Are you going to get a 20% deduction on that $20,000, 4,000 bucks? No, because that $10,000 that you're in the hole carried forward to this year, offset that 20 grand. Now you're only going to get that 20% deduction on that 10 grand. So you want to make that, you want to make money. This is the time to make the money because look at that really great deduction. It's beautiful. So, you know, like I said, it's going to go away in 2025. You got 2024 to maximize that, 2025, maximize that, and pray and lobby Congress and your House of Representatives folks and folks that you know are on tax committees. We really would like to keep this. All right, let's talk about that vehicle and what I like to call high audit items. That's always the bullseye, the red target. So vehicles can be deducted. There's lots of ways that you can deduct them. They can be leased, they can be owned. There's different ways that you can deduct them. In all ways, they have to be used primarily, for business. If you want the biggest, baddest deductions, you want to write that sucker off. More than 50% business use. And so you want to plan very carefully how you're using your vehicle or vehicles so that you can maximize that tax deduction. You have to keep good records here. It's an all or nothing proposition with the Internal Revenue Service. Mileage log, mileage log, mileage log. I know people don't like being tracked, but use the app on your phone to track you. Google Maps is getting you. So you want to, keep track of where you're going for a business purpose. On such and such a day, I went to have sushi with my business mentor. I went from this location to this location, and then back here again to the office. So many miles, starting odometer, ending odometer, because the IRS is going to say, no way did you drive 50,000 miles on your vehicle. Show me all of your maintenance receipts, because they always record the mileage on there. So you want to keep really good records. And if your business use is that high, you could really make some very nice deductions on your tax return. And you've got choices. You can do actual expenses, you can do mileage rate. There's pros and cons to each. And that's working with somebody like me to determine what's going on with your tax situation, what's going to work best for you. Some people keeping track of all their gas receipts is the worst thing ever. They can't do it, they won't do it, they hate it. Mileage is going to be better for them to just take the rate and just stop all of the chaos. It's not worth all of that for them and their time to do that level of record keeping. So it's all about you guys too, and what you can withstand. So the IRS, if they audit you and you don't have a mileage log, you can't prove you went from point A to point B, you get nothing. So definitely, there's all kinds of apps out there. Track it, write it down what you were actually doing, not just you went point A to point B, but what were you doing? Give us that piece. Travel. Travel is also something that's highly audited. Make sure that it's for the business purpose. It's documented. I'm going to a tax conference in Las Vegas. Woo! Tax people in Vegas know how to have fun. So, we've got the flight. We've got, maybe some rental car action. Don't forget that. Make sure that you're capturing that parking, your luggage, the tips that you're doing there. And the sad thing is that meals were at 100% during that post-COVID period. They were trying to help the restaurant industry, and those have now returned to 50% deduction. And that's fair, because if it's you and another person you're having business with, that covers the other person for business, but not you. So that's kind of the intent there. Right on the top of your receipts. Had a business meal with my best friend, Deana, who loves taxes. And we talk taxes the whole meal, right? So now the IRS is going to say, no problem. I can see what you were doing. I see this was a business purpose. Check. Entertainment is no longer permitted. So we all want to go see the Super Bowl this year. I've heard a lot of people having some excitement there. Not going to be a write-off. Sorry, guys. That has ended, and we can't take those entertainment expenses. So I'm very sorry. Other items that will get you audited a whole lot: repeated losses on your business. IRS starts to go, are they really in it to win it? Or are they just in it to decrease their income and avoid tax? So they can start to dig in and see what's going on there, and they can actually disallow those losses. So do be careful. Good business records. Sometimes bad things happen. Nobody expected COVID, and it really took some businesses for a ride. So, have good understanding of what's going on with your business and your plan.
Is that auditable after like 1 year or 2 years, or
It
would you say
depends on the
multiple
business.
years?
Yeah, it depends on the business, honestly. Generally in a 3 to 5 years time period, the IRS really expects you to start making money. When you first get started, it's probably not going to happen because there's a lot of startup costs. But the intent is they want to see, steady progression towards the profit, because they want their money, and you want your money too. You don't want to be bleeding money. So there are times, like with writers or people that are doing like technological kinds of advancements, it might take them up to 5 years to get to a profit, because they got to do patents and all this other stuff. So there's ways to disclose that to the IRS. But with COVID, that would be a good argument. You know, I was on my way to making money, Mr. IRS, but year 3, COVID happened and I was at ground zero. I was at ground -0. So sometimes things happen, but definitely that is a target. Sometimes I will see a bunch of business expenses and no income. And that is a very high chance of being audited. It's like, are you actually in it to make money, or are you just trying to find things to write off? So make sure that if there's a reason that you're not earning any income, you are trying your darndest to get out there and sell the product and do the thing, and just nobody's biting. Document all your efforts, your advertising, your outreach, your networking. Show them that you're really trying, because that's a high audit item. And yes, you can still write off your expenses with no income in that scenario, but you know, it can only go so long. You're bleeding money. You don't want to do that. Lastly, the last high audit item is the earned income tax credit. And I kind of touched on that a little bit earlier. And that's a credit for people with families or a lower level income to help them, you know, just get a little bit more back to help support them. And there's a little tricky business going on with people with their businesses to try to hit the sweet spot, I call it, by using deductions to get there. And that is a no-go. People that do that, that hit the sweet spot with businesses, are at extreme high risk for audit because there's so much fraud. So make sure that if you're claiming the earned income credit, you got to be squeaky, squeaky clean. All the beautiful records, you know, you're doing all the right things, because you will sail through an audit, no problem. Lowest threshold for meeting the definition of business in terms of revenue. Well, there is no lowest threshold. You can actually have no income. Like I said, if you're out there and you are beating the pavement, you are doing your best to sell the things and nobody's biting, are you still trying to make money? Yeah, you're still trying to get out there and do the things. And the hope is that it's going to take off and that your idea is going to get some traction. But sometimes businesses do and sometimes they don't. Sometimes it just takes time. So yeah, you can have no revenue and still be in business. It's all about your intent. So yeah, you can still be in business. So since we're talking about the scary big bad IRS, what's the cost of doing it wrong? Audit expenses. I'm not a cheap date, y'all. You know, when you get audited, you need professional help. You can do it yourself, but they call it pro se. When you try to represent yourself, 95% of the time, the IRS is going to win. So don't go it alone. It's not in your benefit. Do get professional help. If you don't have the funds or the finances, there are low income taxpayer clinics that can help you. You want a tax lawyer, U.S. tax court practitioner, which is USTCP, an EA, a CPA, someone who's qualified to help you. Those are people that are actually able to speak with your voice with the IRS or state agency when you're being audited. You don't want to get hit with additional tax. That's the opposite of tax savings and tax deduction. So good record keeping. Tax penalties is just insult to injury because you can't even deduct those suckers. So you don't want that. Interest right now is, get ready, 8%. And depending on what's going on with the Fed, you know, that's not a place that you want to be owing any money. So one of my tax strategies that I'm telling folks right now is you want to make sure that in addition to saving for retirement and making sure you have a retirement fund and emergency fund, you want to actually be paying down your debt right now, because nobody wants 30% credit card debt. It's insane. You're bleeding money. Stop it, stop it. Because it's not worth it for the tax deduction to be going money out the door like that. So look at your overall big picture and see where you can save yourself some money and add to your bottom line. Cost of doing it wrong can add also legal complications to your life. They'll place liens on your property, court actions possible, because you can always, you know, make appeals in court. It hurts your credit. You start to get all these scam letters in the mail about people offering to help you and pennies on the dollar, and Lord, you don't want any of that in your life. So the best tax deductions really is just doing it right, keeping good records, making sure you give us all the things so we can see what's going on, so you don't miss a deduction and you don't get hit with an audit where you don't have good records and then you get hit with penalties and bad and doom and gloom. So definitely want to avoid all of that. I also want to take a second to call out Facebook and TikTok, although I know we might be on there. But there's a lot of strategies out there about, S Corp strategies or this or that strategy. Every taxpayer, every business is different. And the tax law is 50,000 plus pages. No one size fits all is going to work for every person. And sometimes the people that are pushing these strategies, right now there's a huge thing going on with conservation easements and all of this conservation, charitable deduction stuff. Those are actually, IRS is going after those people hard, and people are going to prison. And this is something that was pushed on Facebook and TikTok and all that. So please be careful about what you see on Facebook and TikTok and all of those other places. Talk it over with a professional. I love it when people send me stuff on there. Sometimes it's good and sometimes it's a little cringy. So please be careful that you get qualified tax advice. That's specific to
most people aren't giving out $40,000 worth of credit for no checks or no history at all, something like that. So just be careful.
yeah,
It's crazy.
yeah. There's so many scams out there right now too. It's so terrible. There's something going on right now. You guys may have heard about it, the employee retention credit. During COVID, they were just trying to keep people employed, right? Y'all familiar with that?
Mhm.
So there were all of these, we called them tax mills that came out, and they were going after all the business owners. You can get $100,000, you can get $500,000, we'll file all the forms for you. And it was a terrible scam, and all of these business owners are on the hook. And it was so bad that even though you can still file them, the IRS has stopped processing them because there's such huge fraud. And they've offered voluntary disclosure program, and they're going after these people, the business owners and the mills, because it was such a fiasco. Huge waste of money. And a lot of people got scammed. So you just want to be so careful about not only what you see on Facebook and TikTok, but these fly-by-night companies that jump in promising you all of these beautiful things and then leaving you on the hook because who's signing the tax return under penalties of perjury? You are. And it's you who's on the hook. And it's just a terrible thing. So you do just want to be so careful on that. So I'll give you guys another goodie because a lot of people did this. And you just want to be aware of what's going on there so that you can avoid that. If you did file a claim that you're not positive on, you don't feel good that it was handled well, you might want to seek a professional, double check it, crunch the numbers, because if you disclose and you come to clean to the IRS, oops, my bad, it was happening fast and furious and I didn't understand, you can probably avoid some penalty and some interest by coming clean yourself and head it off. So something to think about. I know it's scary, right? These bad people out there, and they're not only after, your money, but they're after your personal information too. So it's just so bad. So let's talk about what my goal is as a professional working with folks. Like I said, I'm going to put a little different twist on it. It's not just about, giving you the biggest, baddest refund, but I want you guys to use your deductions wisely. Net benefit, what's going in your pocket? How's the deduction going to serve your business long term? Is it going to make you more money down the line? So if you go out and you buy a $100,000 SUV, and there's a cap on how much that you can deduct, which I've placed right there, $28,900. That sounds like a nice, yummy deduction, don't it? You got a 22% tax bracket. What's your tax advantage? $6,358. Was it worth it to go out and buy a $100,000 SUV and only get that for a tax benefit? What's that SUV doing for your business? How is it earning you more money? What's the benefit? So you really want to just make sure that you're checking that whatever you're doing, it's going to serve you the best possible way over a long-term strategy. And so you want to make a plan. Where's your business going? Do you want to buy a building? Do you want to expand into multiple locations? Do you want to be everywhere on the internet? There's so many different ways that businesses move and operate, and your tax plan and strategy has to meet the business and where you're going and work together, not hinder you, not pull you back, but actually move in concert. And if there's something that you're going to do, maybe there's a tax strategy that will help you. So you definitely want to make a plan, know what your business plan is, where are you going, and see what the tax can do to help you. Also, you want to claim all legal deductions and credits. making up the magic. It's the same as last year. We call it Sally in my industry, or it's on the ceiling. Definitely keep those good records. Make sure that you know what your deductions are and, all of your expenses so that you can claim those legally, because really those are the best credits and the best deductions, because you're not going to have to be audited. You're not going to have to pay extra tax, extra penalty, or any of that stuff on it. So that makes me the happiest when I see somebody's claimed every legal thing they can. Man, my little bean counter heart gets so happy. So good record keeping save you every time. And like I said before, more money in your pocket, even if you're taxed on it, it's worth it. Don't let the system hold you down or hold you back. Don't let your avoidance of tax stop you from making big money. Go out there and make that money, but you just need to know that if you're making big money, there's things that you can do. You can plan. There's, maybe investments in your business that might be advantageous. Contributing to your retirement or your employees' retirement, profit sharing. There's so many strategies that can help kick the can down the road or smooth or even things out. But don't let anything in the tax law hold you back from getting out there and making the big dollars, because that's what it's all about. Excited about 2026. Nope. Look at all those tax changes. Absolutely insane. There's so many of them. I'm going to share with you guys another little goodie right here. And this is basically the return to the pre-Tax Cuts and Jobs Act that happened. And a lot of things that happened to simplify the taxes and get us on the quote unquote postcard, which never happened by the way. It was absolutely laughable. All of that stuff is going to snap back in 2026 unless Congress acts to extend it, change it, tweak it, whatever they're going to do. But if they don't do anything with it, boom, we're all going back to the way it was. So there's benefits and there's also not so nice things. Loss limitations right now are very stringent. You just can't claim a lot of losses to certain levels. If you're making certain money or thresholds, losses are really crunched and they're just, getting kicked down the road. The standard deduction is right now, it's almost 30 grand for a married filing joint couple. You make 100 grand, you kick off almost 30 grand, you're paying taxes on 70 grand. That's pretty nice. But after 2026, it's going to be half of that. You make that 100 grand, you're going to get, $15,000 deduction. And then you're going to get the personal exemptions back again. So for a guy and a gal, that's not going to equal up to that 30 grand. You're not going to get close to that. So you're going to wind up paying more tax. So, you need to structure your tax plan for that. You're going to pay more in taxes in 2026 and beyond, most likely. That 20% deduction that I was so excited about, bye-bye. But on the flip side, for those that are in certain states where there's really high state tax, the SALT cap's going to get removed. It's supposed to snap back and relax for those folks. And so if you're in California, you're in New York, or some of those other high states, that's going to be a breath of fresh air for those folks. Ziggy, be quiet. Sorry, I'm setting alarms. That's how I stay on track. There we go. Sorry about that. All right, employer credits for paid leave. If you guys have employees, those are supposed to also go away at that time. I like those. I think that's really helpful for your employees, that they can actually, if something's going on, that there's a safety net for them, but that's supposed to go away. Personal exemptions, like I said, pros and cons with that. If you're just you and your wife, you and your husband, it's not enough to make up for the standard deduction being cut in half. However, if you've got a big old family with 8 kids, and I've seen that, 13 kids, personal exemptions coming back is pretty sweet, right? That's 4,000 and change. It goes up with inflation, so it's a weird number, but that could be really nice. On the flip side, child tax credit, which is currently 2,000 per kiddo, it's going to go back down to 1,000 per kiddo. So what's better, deduction or credit? Credit. Pros and cons. So I just got to crunch the numbers and see what that's going to look like, but it's a challenge. The tax brackets are going to increase. They really kind of crunched them together, and they raise the amount that you have to make before you hit the next tax bracket. And we have what we call a stair-step system in our country, which means the first X dollars you make is 10%, then you make that next dollar. Everything that came before it was 10%, but that next dollar is going to be that 12%. So you're not really paying all your income when you get to 22% at that full thing. It's a step up. But that step is going to be a bit steeper, a bit meaner when that all snaps back. And there's some comparisons there. You want to be prepared for it. And you want to change your withholding and your estimated payments to meet that need. Prepare for it. Most likely, I can see Congress not stopping that. But who knows? You never know what those folks are going to do. There's also going to be a reduction of estate and gift tax. All that stuff was cut in half or doubled. It's going to be back cut in half. So that's kind of sad because right now you give a car to your kiddo for college graduation. Depending on what you get them, you may not have to report that gift and file a gift tax return and do all of that complication. But it's going to be a whole lot harder when that thing's cut in half. So not so good. Like I said, child tax credits are turning to $1,000, kind of a bummer. And that bonus depreciation, this is a hot topic. Like I said, that's making its way through Congress right now because it's supposed to be slowly decreasing and being phased out. And folks, business owners don't like that. We want our 100%. Thank you very much. And it's passed the House of Representatives to extend that. Going to the Senate, we'll see what happens. So super, super exciting. This is my information. Then you've got my office number, my fax number. That's my email and my location there at Fort Huachuca in Arizona. You're always welcome to reach out to me and ask questions. I do my best to get back to people as best I can. Right now, it's kind of hot and heavy in my office because 'tis the season. It's my Christmas. But I do work year round and I do serve taxpayers year round. And I'm very passionate. Sharing one last little goodie with you guys, and I'll take some questions. This little goodie that I just shared is Tools for Small Business. It's from my second favorite website, irs.gov. And it's got some nice little links in there to share with you guys as business owners that you might find helpful.
Yes, ma'am. Ms. Simpson, we want to thank you at the XY Perspective for what you've done for us and giving us all this wonderful information. Ladies and gentlemen, give it a hand up for Ms. Simpson and her presentation. Before we start in the Q&A, Ms. Simpson, if you could stop sharing your screen, I want to give like 2 minutes to the audience, just give a brief recap on some of the stuff that you talked about. Fear is a big thing when we talk about these things here. And what I would like everybody to understand that the information that's being put out is designed to take the fear away so that you can do this thing in confidence and make sure that you was doing what's best for your business and your family and yourself. It's designed to keep you out of trouble by doing things the legal and smart way. And that's why we have the experts come on and give out the information so that you can then return to them and get more information. Like we always say at the XY Perspective, knowledge is power. And the more knowledge you have, the more powerful you can become. So it's time for the Q&A. We'll take about, I don't know how long you have, Ms. Simpson, but we'll take maybe 3, maybe 5 questions and give the answer. If you got more, we'll put her contact information back up on the screen. You can copy it all down and then go to her directly. Let the experts do the heavy lifting so you don't get squashed. All right. All right, Ms. Simpson, the floor is open. Everybody, you can unmute if you want to and use the hand raise feature if you know what it is. If not, type your question in the chat and we'll go from there. Floor is open.
Ms. Simpson,
Yes, sir. Hello.
how are you this evening?
Wonderful. Thank you, sir.
Your thoughts on doing a mid-year type of checkup on your business?
Oh, yes. I actually encourage a quarterly checkup right before you're starting to make estimated payments. It's
Okay.
an excellent opportunity to make sure that you're paying the appropriate amount in. And if circumstances are changing, then you can change your strategy too, and you don't over contribute or actually cut yourself short. So for business owners making estimated payments, a couple weeks before you do that is a really good time to check in with folks like me.
Thank you, ma'am. Should appreciate that.
Yes, sir.
Come on now. I know y'all got them. I know y'all got them. Come on with those questions.
All right. Well, I got a quick question if possible. And again, I might have missed it because I did jump on late. But
Of
in the
course.
event of, like you say, a really good year, and again, you have a big cash windfall as far as, a new contract award. So let's say in the realm of $2 million, right? You got $2 million of extra revenue that you had not forecasted for. Now, reinvesting that or 50% of that, in like say some type of facility or building, like how is that on the tax benefits? Because I know that there's some benefit to that to help offset that new income.
If you're going to get an investment like that and you're going to put it into a building or a large piece of equipment, you're not actually always going to be able to take the whole kit and caboodle, the whole deduction that year. You're going to get something called depreciation, and you may have to spread it over time. There are other depreciation methods out there. Section 179 will let you write off. There's some math involved and limitations, but you can write off a significant portion with Section 179. Bonus depreciation is very helpful, but if you're investing in certain things like real estate, you can't use those things. So depending on how you're going to put your money into those investments, will change the tax treatment of what you can actually do and write off. Great time to invest in equipment. I like that
Mr.
one.
Tatum, that's good for you? Mr. Tatum?
No, that's actually perfect. Thank you.
Okay. Like I said before, if there are more questions, you can ask more, type them in the chat. But the main thing I would like everyone to do is to contact Ms. Simpson directly and get the information straight from the proverbial horse's mouth. Don't let it be secondhand, thirdhand information. Some always gets missed. Go right to the expert that you know, the one that's sitting right in front of you right now. Go to her office, get in line if you have to, and get those questions answered the right way. The XY perspective, our audience is majority men. So I know some of you guys are too proud. I don't need no help. Yes, you do. I don't want to see none of y'all in prison. All right, let's avoid jail time at all costs. So, gentlemen and the ladies that are watching, please ask a question now if you need to. But if you don't want to put your business out there like that, contact Ms. Simpson directly. And after this next question, I have her put her information back up so you can copy that down. Let's do one more and then we can wrap this up, man. If everybody's okay with that.
Ms. Simpson, is emailing a preferred way to reach out to you?
It is to some extent. So email is not a secure method of communication. So when you email me, don't provide me, specific numbers or socials or any personally identifiable information that you don't want to be compromised on, the whole wide world. But we do have a secure online portal. If we have those in-depth questions that require, exchanging that type of information, we can sign you up to the portal and you can chat with us in there securely. But it's a great way to make an introduction and have a good conversation.
I was going to say, is this a good time to call you, or are you busy at the moment? Things of that nature.
Yeah, absolutely. That's perfectly acceptable. This time of the year, I will say I'm fairly busy, but there are times that I see something going on and I'll pick up the phone and I'll be calling you because I've got news and I'm excited, or I see something going on with your tax return. So, that goes both ways, and I'll always be respectful of your time. Is it a good time to chat if you do answer the phone?
Thank you again.
Yes, sir.
If you could share your information again, Ms. Simpson, that last slide, put that back up on the screen for us.
Okay. I will say, because you made the statement about going to jail, you can't get blood from a turnip. The IRS doesn't generally like to send people to jail because then they can't get no money out of you. But if you're somebody really exciting like the Grizzlies, they might want to go from you to make an example out of you. So generally, they're going to want to make sure that you can still work and pay them, and they're not going to take you to jail unless you're super naughty.
Yes, ma'am. Again, I'm addressing the audience now. Look, listen up, guys. We know about this time. It happens every year. Don't be afraid to make a phone call or an email. It could help save your business and your future and even your family too, if your family is relying on your provision. You're one of these 100% guys that pay all the bills and gets everything done. It is imperative that you make as much money as possible, but also keep as much money as possible. And that's one of Miss Simpson's big things. As we stated in the call, you do not have to have a registered business or an EIN to take business deductions. If you're working from home, that when you turn your bedroom into an office, half of it, and you're using, you can claim that as a deduction with your business. There's always something. There's potholes somewhere to fill in with information. Call Miss Simpson, email Miss Simpson. I don't know if she got, I see a fax on there. You can fax information as well for those of us who still do that. Get your questions answered by the professional. Don't let another year go by where you're just paying back money to the IRS because they say so. You have power because now you have knowledge. And the knowledge that you don't have, you can go and get from someone else and they can give it to you as well. So this is imperative that you guys listen up and follow up on this. I want to see Miss Simpson's office with the phones never stop ringing because all the questions that get asked. And Miss Simpson, if you want to add anything else to it, we'll break from there and call it an evening. I know it's getting late over there where you're at, but I appreciate everything you've done for the XY perspective today. All of the information that you put out. We're grateful, we're thankful, and we appreciate all that you've done for all the service members and their families. I know you helped a lot of us through a lot of hard times. Like I say, COVID was a difficult situation for a lot of families. We just appreciate what you are doing and will continue to do for families. So
Well,
if you
thank you
want
so
to say anything to close out, we'll leave from here.
All right. I just want to say thank you to everybody for granting me your time and your attention tonight. And thank you, Mr. Marcus, for sharing me and my perspective with your audience. I really appreciate that. I really enjoy tax. I'm very passionate about it. And you'll notice I'm all about the horse's mouth. So anything that I'm going to tell you, sure, I have opinions, but I'm always going to back it up with information directly from the Internal Revenue Service, the code, the law, because everybody's going to be, I never heard that before. Somebody told me different. So, if you get told something weird, it's okay to go and check and double check or ask the question, where'd you hear that? Show me. But I'm happy to do that. And I'm grateful so much to serve all of the taxpayers that come into my office, their family.
Yes, ma'am. And thank you again for serving us on the XY perspective. We are trying to end the narrative that our people are perishing for lack of knowledge. We have the knowledge and it's readily accessible for you. All you have to do is swallow your pride and ask a question. You don't even have to raise your hand. Send an email, text, or fax, like we saw on the question. Send those information there. But we thank you again, Ms. Simpson. I thank everybody else for joining us. My name is Marcus Bradley. I am the founder and host of the XY Perspective. And I hope you all have a very good tax season up until April 15th when everybody gets their money back. Yeah, let's have a good evening, and I will talk to y'all next week, matter of fact. Bye-bye.
Thank you.